Hey VV Nation, welcome to our channel. My name is Glenn, Senior Stock Market Strategist for VectorVest, and it's Tuesday. It's time for the 6 p.m. video, and we know we've got a lot of big tech names reporting earnings this week, and today I'm going to compare two of them, Apple versus Amazon. All right, so you guys know I love me some Apple, but I'm not in love with Apple, but I'm going to give my straightforward opinion on both of them and why I feel the way that I do. Now, we all know that the big tech names are going through a downturn right now because a lot of money is going into the IWM or the Russell 2000 because of the anticipation of a rate cut. Probably not tomorrow, but most likely in September. We'll see how that goes. You know how I stand on that. But with that euphoria, a lot of people are getting into the lower dollar stocks because it's going to be looked at as cheap money. But if it does happen, it's not going to only be good for the IWM going forward. It's going to be good for all stocks. But the question is, right now, prior to earnings in a couple of days, what do you think about these stocks? So let's get right into the stories. And I'm going to start off with an Apple story. iOS 18 beta features, Apple Intelligence, and everything new upcoming to your iPhone. That's the big story that has been pushing Apple higher, even though it has succumbed to the major downturn in the tech stocks, which I think, something, folks, I think that the AI, all of that stuff is still in play, just not right now, but they're all still in play. We're still in the infancy of AI stocks and all of the stuff that goes along with it. So I think that this is not a bubble. This is not any of that. It's just taking a healthy breather because a lot of people, and I mean a lot of people, have made a lot of money in these stocks over the last couple of months. Now, next story. This is what I think is going to hurt Apple because iPhone sales plays a big role in Apple in reporting earnings. Now, of course, we know that the service sector carries them a lot of times outside of the iPhone sales. But there's a couple of things that I'm looking at from an iPhone sales perspective. The Apple Intelligence AI rollout has been delayed. And a lot of the move to the upside with Apple was based off of what they were doing with this AI rollout. Meanwhile, Samsung claims Galaxy AI closes in on 200 million devices. So that's another thing that bothers me, is that the competition is creeping up on Apple, and Apple is feeling that as well, which talks about my next story. Apple slips from the top 5 in China. Why is China so important? Because China buys a lot of everything globally. So Apple phone sales in China slipping. Of course, I love what they did with Baidu to hook up with Baidu, the deal that they made with Baidu to get the people in China more in line with what they feel comfortable with to put onto the iPhones. So I think that was a great thing, but is it enough? Is it enough? And the competition is creeping in on Apple in China, and that's going to be a bit of a downside for me there. Let's talk about Amazon. Amazon, clean market beating trajectory, rating upgrade. This is a story that says Amazon is set to report Q2 earnings out of big tech. Shares have doubled in the past year and a half, but are now going through a downturn, as well a lot of stocks in this space are. Amazon's growth story remains the cleanest in big tech. We're going to take a look at that in a second. Investors should capitalize on this hyper earnings per share growth at a reasonable price opportunity. I'm not sure that I'm all on board with that in this story because we're going to take a look at the graph. Next story, Amazon expanding into the grocery delivery market. Now, that just adds more potency to Amazon in its ability to make more money. I like this story. Amazon introduced a grocery delivery subscription for Prime members, aiming to monetize its 200 million Prime members and enhance Whole Foods' competitive edge. All right, this was just done today as I'm recording this video. Downside risks, though, include competition, China again, from Chinese e-commerce platforms like Temu, Shein, impacting Amazon's e-commerce growth. Amazon launched its discount section to compete. So you remember when Wish was out there? Temu and Shein is blown Wish out of the water. I don't even know if anybody goes to Wish anymore. But the competition here, just like there's competition for Apple, the competition here for Amazon could affect the stock in an adverse way. All right, so those are the stories. Let's get down and dirty now. So let's go look at the earnings. Apple is down today. Last quarter earnings, they beat by 2 cents. Revenue, they beat by $299 million. So now let's go look. Interesting, and this is what I don't like. Earnings, again, was at $1.53 last quarter. How about now it's at $1.34? Companies are guiding lower in the ability to beat earnings and beat revenues. It makes it a little easier for them. And on paper, they beat earnings, they beat revenues. Woohoo, let's go. But they guided lower to make it easier for the bottom line to be in the black instead of in the red. That I'm not feeling. All right. So, we want to beat earnings, we want to beat revenues, but they're guiding lower as opposed to what it was a quarter ago. Anything else? Now, interesting. As I look at earnings per share year over year, the consensus and the actual, we haven't had the actual yet, but beat in line, pretty much right in line. But I noticed that the earnings per share line is going up and up and up and up. And I think a lot of that still has to do with the generative AI going into the Apple operating system going forward. Now, something else I want to take a look at, momentum. Looking at the momentum, all right, I'm looking at the S&P 500 compared to Apple. Holy smokes. Apple is underperforming the S&P 500 and has been for a little while. Now, they both rose, but look at that. Apple is underperforming the S&P 500. That gives me cause to pause. Let's go to Amazon. Amazon, 98 cents. They beat by 15 cents. Revenue, they beat by $751 million. That's a bigger number. But look at their projected for the upcoming quarter, 102, higher than the last quarter, 148 as far as revenue, higher than the last quarter. That makes me feel a little better that, they're trying to do the best that they can for their investors, but they're guiding higher. I like that. Let's scroll down a little bit more. Now, this catches my attention. Look at the earnings per share year over year on Amazon falling, but look at the beats on earnings, bigger beats, all right, and they're guiding higher, all right, very interesting. Beat, not, blowing Apple out of the water as far as the beats are concerned. So again, I feel a little bit more comfortable with the Amazon play. Now, what do I do with either one of these stocks going into earnings? And let's give a little talk about that. So here's the two stocks right here. There's Amazon, there's Apple. As they're trading today, Apple's down just a little less than Amazon, but I look at them. Both of them are overvalued. Well, that's because a lot of stocks in the market are overvalued at this particular point in time. Amazon, though, has an upside of 1.4 on relative, 1.6 on relative value. It should outperform the market over the next 1 to 3 years, where Apple, on the other hand, relative value is below 1. Relative safety above 1. Safer stock than Apple, even though Apple's got a relative safety at 1.28. Amazon comes in as a safer play. Different story when it comes down to which moving up or moving down. Amazon, on the other hand, financially or fundamentally fine, it's going down in price. Whereas Apple, which is not altogether fundamentally fine, is going up in price. And Apple's got a buy recommendation and Amazon's got a hold recommendation. Whew. What is an investor to do with these two stocks? Well, this is what I do like about Amazon. Earnings growth, 39%. So a company's earnings is the engine that drives it higher, right? And sales is the fuel in the engine. But look at that, 39% earnings growth. That is a spectacular picture, whereas Apple, no longer really a growth stock, still a staple in the market, but an earnings growth less than 10%. Well, you know what else I like about Apple? Apple's pays a dividend. It's got a dividend yield very low, but it's got a dividend safety of 89, which means that it's going to be a good, safe dividend for the long term. Put all of that together, what am I thinking about as far as before earnings? I probably would feel a little bit more comfortable if I wanted to buy either one of these stocks before earnings, would be more comfortable buying Amazon rather than Apple. And right now I have a price target, I gave it a while ago, of $250 on Apple. I don't think it's going to hit that price. Based upon what's going on in China with the sales, I'm sure that the services side of Apple will do just fine, and it will probably be and play the bigger brunt of the revenue side, but it's the sales side. And you know, that's how Apple gets people into the ecosystem, is by the iPhones. The iPhone sales are not where they need to be, and they're probably going to falter in the earnings report. But I think a lot of it was the generative AI that was going into the newest operating system. I don't think it happens. I don't think that happens until the next quarter. We'll see what happens with that. So putting the two together on a graph, and now both of them, neither one of them look like I'm super warm and fuzzy. Put it on a 3-month graph. There's Amazon. I feel more comfortable buying into Amazon, but it's in the slow lane as well. So you know what I would do if I'm thinking about looking at Amazon? I see the downtrend, man, that you can't get up, you can't get past that. You can't get, there's the downtrend. I would wait to see what happens with earnings. And even though it would be in the middle lane, I would buy if it breaks above the downtrend. I would buy if it breaks above the downtrend, because I like Amazon sales. They're good. North American sales, the whole 9 yards. I like Amazon overall better than Apple. But if I'm going to think about getting into it, I would wait until after the earnings. I would not buy it before earnings. I would wait until after the earnings, but I'd look at this trend line. If it goes and closes above that trend line, I'd jump on board even though it's in the middle lane. When I look at Apple, man, big downtrend. I love, now after the last earnings, Apple went up. Look at that. Apple went up. And again, a lot of this was the stories behind the generative AI going into the operating system. With that now being said that it was delayed, with Apple being knocked out of the top 5 suppliers or phones in China, that's going to hurt them in a big way. I think they go down. I think Apple's got more downside than Amazon. Do I buy into Apple? I don't think so. But guess what? What happens if they come out with something that says, some catalyst that says, man, something, and pushes it higher? It will be news driven, but based on the numbers, I think that they miss on revenue. They probably beat on earnings. I think with Amazon, they beat on both earnings and revenue, but both of these stocks are being taken down with the majority of the stocks in the space that are getting beaten up right now. That's going to play a role as well, but it's going to be the forward guidance. Apple, though, for the first time in a long time, I don't think it goes higher, and I don't think it hits my profit target of 250, at least not right now. In the future, it still does have that ability, but just not right yet. Folks, if you like what you saw here, hit the like button. If you got anything to say about it, let me know in the comments. I'd be very interested in your takes on both Apple and Amazon. If you're brand new to the channel and you like what you saw, don't forget to hit the subscribe button. That's the only way to make VV Nation grow. Folks, this video is over. Until the next time, see ya.
Is your portfolio in need of a refresh? Want to learn the best tips and tricks for buying the right stocks at the right time? I'm Brian D'Amico, a senior investing coach here at VectorVest, and I'm inviting you to our Portfolio Challenge live stream. You'll learn step by step how to weed your portfolio of bad stocks and replace them with winning stocks. You'll walk away with a daily plan to manage your portfolio with complete confidence. Go to VectorVest.com/PC to register and download your free workbook. Mark your calendar for August 7th at 9:30 a.m. Eastern Time. You don't want to miss this.